Hi friends, I'm back with one more video. So today we will be discussing about the delta. So the ABCD and XYZ of delta. So wrong to say XYZ because I'm just a learner, so no one can tell you XYZ. I'll change the this thing, but at least ABCD of delta. So before watching this video, already I've made a video on theta. You can just go to my YouTube, right? In the video section on the search, you search with theta, you'll get the first video. It's a 19 minutes video. Basically I've explained you the entire theta by using the sensible tool and obstra. All right, so now one of the important question, what is delta? Like, because I do not believe in the textbook definitions and everything, but let me tell you the textbook definition. See what is delta is. Okay, I think this is very tough for me to tell you what is delta. Okay, let me take you to sensible. Okay, see this is the option chain, right? So let's say this is the current market price. I'm taking the Nifty stands at 17,650. So the meaning of delta is, right, we have the delta here. So each and every strike will have the delta. Okay, the meaning, the definition of delta is the increase in premium, right? The increase in the particular strike premium, be it in the money, be it at the money, or be it OTM, right? The increase at where the premium of a particular strike increase with the momentum of the underlying asset. So what is the underlying asset here? The underlying asset is the Nifty, right? So whenever Nifty moves 50 points or 100 points corresponding to that moment, based on where the delta stands on that particular strike, the premium would increase. So when I say premium, this premium 105. So let's say 1750 strike, the premium stands at 110. Okay, let's say the market increased by 100 points. Let's say market increased from 17,650 to 17,750, right? The definition says the delta of this one 17,650 is 52, right? With a momentum of 100 points. So this 0.5 is in decimal, right? The momentum of 100 points, right? This premium will increase by 52 rupees. Okay, so from 110 to 162 or 160, 160. Let's take this as 110 round figure. So whenever the Nifty goes up by 100 points, this premium will become 109 plus this 52 rupees. What did I say? With every 100 points, the premium will increase by 52. So 110 plus 52 would be 162. If you all guys agree with this thing, then you are wrong, right? This is not as straight as the textbook definition says, that where the this whenever the Nifty increase by 100 points, right? So the premium will increase by 52 points. Okay, so let just to show you, right, I'll take you to the next page. See, this is what I'm going to tell you, right? So there are like many parameters involved in terms of doing the premium calculation. There are many parameters pertaining to delta. Forget about the other Greeks. Delta is one of the Greek, right? So there are like multiple parameters involved in the premium calculation. The momentum is one thing you'll get to know, right? Momentum is at what speed, right, the price has increased, at what speed the Nifty has increased from 17,650 to 17,750, right? Was it with a quick momentum, or it was a very small momentum, or it was a gap up or gap down, right? I'll show you all the examples. The second thing is like time factor. Even this factor, right, makes a very plays a very significant role in the premium calculation. When we say time, this is basically the theta. Okay, so when the market is moving from, so let me take this pen. Okay, I think this is going to be like very tough. So let's say, what did we say? 17,650, right? 17,650 was the current market price. Okay, your delta was 0.52. Let's say your delta was 0.52. Okay, and then let's say the market quickly moved to 17,750. 17,750, 100 points move, right? When I say quick, maybe within a 5 minutes candle, 10 minutes candle, or it can be a gap up. So then this 17,750, by the time it comes, right, the premium was standing at 110. Okay, so this premium will become how much? 52, right? So based on the calculation, this has to become 162. All right, this has to become 162, right? That's the definition of the delta, right? Because market has quickly went from 17,650 to 17,750, right? So if it was a gap up, if this was the gap up, this could have been at 170 or 180 also, 170 or 180 also. Try to understand, friend, when I say gap up, because what is happening when we have a gap up of 200 points the next day morning, right? Definitely the delta is going to increase, but do you think the theta is going to decrease the premium? Because market is not giving time. Market has not even given the time for theta. What is theta? Theta is time. When we do not have the time for theta to decay, so this 162 with though the delta was 0.52, ideally this should become 162, but this 162 can become 170, 180 with the gap up. Point number 1, because there was no chance for theta to decay. Option buyer will win here, because what does the option buyer need? The option buyer needs the quick momentum. What does the option seller need? The option seller needs slow momentum, because that's where he get the advantage of getting the theta. Try to understand, friend. Try to understand. Pause the video if you're not able to understand. Again, rewind the video. Right? Scenario number 1. We are discussing about scenario number 1. That's it. We are discussing about scenario number 1. What will happen if the gap up? If the gap up happens, okay, the theta will not give. Actually, market is not giving the the respect for the theta to decay this premium. So the option buyer, as an option buyer, this 110 will become 160 or 170 or 180. I mean the kind of gap up it is giving, right? Let's talk about scenario number 2. Let's talk about scenario number 2. Okay, let's talk about scenario number 2. Scenario number 2, let's say from 1750, right, the market is slowly going, right, within 3 hours or 4 hours it is making a zigzag movement, right, zigzag movement. So do you think this 110 will become 162? No, because, right, the market is going slowly, right, from this premium, right, the theta will also decay, right? So from this 162, maybe 20 rupees of decay will happen, right? You're getting my point, right? So this will not become 162, so this might become 150 or 140, because market is slowly going up. And let's say scenario number 3. Let's talk about scenario number 3. Right, we've discussed scenario number 3. Let's say from 17,650 to 17,750, that took like 2 days. It went up, it came down, it went up, it came down. Slowly it is going up, but it took 2 to 3 days. Do you think this 110 will become 162? Obviously no, because you will have more decay. So this 162 can become 120 or 110 or 130, because the kind of market is moving with a very slow zigzag movement. So the option seller will also get the benefit in terms of theta decay. At the same time, the option buyer can also get the benefit, because end of the day it is going in a upside moment, right? It is not coming down. If it is coming down, so then this 162 will become, this 110 can become how much? 80, 90, and even this will decrease. So you got my point. So we discussed about 3 scenarios. One is the quick gap up. When the gap up happens, this will become from 162 to 170 to 180 also. When the market is going with high momentum within the single intraday, this can become, right, 162, this can become 150 based on the upside moment it is going, because at this time, though you will get little theta decay, but you will get more of intrinsic value. Right, and now if it is taking 2 to 3 days to travel from 17,650 to 17,750, right, you will not see more momentum. But the other point is what I wanted to explain you is, like, I've discussed about 3 scenarios. That this is fine, friend. This is enough for you to understand, right? To understand that momentum, right? This is not a straight formula, right? Momentum. We have discussed about momentum. We have discussed about time, right? These 2 parameters plays a vital role in the the premium calculation. Now let's discuss about the expiry. This is very important. So for expiry, let me take you to again to senses of option chain. Now what did we say? When this market from 7, okay, let me delete this. Let's say the market went from 17,650 to 17,750. Let's say 100 point. What did we say? the delta was 52, so this 52 plus 110, that is 162. Do you think by the time the market comes here, this delta, this premium will become 162? No, because try to understand what did we say for every 100 points, because for every 50 points from 17650 to 17700 check the delta. This stands at 52, this stands at 44, and the next delta stands at 37. So as and when we go OTM, the delta will reduce. As and when we go in the money, the delta will increase. That's the golden rule. Okay, at the money will be at 0.52%, like 0.48 to 0.52%. As and when we go up in the money, the delta will increase. See, the delta keeps on increasing. This is your at the money, the delta keeps on increasing. It will go till 1. As and when we go OTM, the delta keeps decreasing from 52, 44, 37. This will decrease, this will go till 0. All right, so now it is not fair to say that from 17,650 the market went to 17,750, so this 110 will become 162, because right for 50 points movement, try to understand. I'm not sure if I'm able to explain you. For this 50 points, this will get into consideration 0.52, but for the next 50 points from 17 to 1750, this delta will get into consideration. But by the time the market moves, this 0.44 will become 0.52, and this will become 0.6, because the market is moving. You're trying to get it right. This will not remain 0.44. By the time the market stands here, right, this will become your in the money. When the market stands here, when the in the money is like 0.60, so when market comes here, this will become in the money, so this will be like 0.60. This one become 0.60. As and when the market keeps going right up and up and up, this particular strikes will become in the money. So initially this 0.52, now the moment the market stands here, this might become 0.78 or 0.80. Right, this might become 0.89, this might become 0.9, this might become 0.6. You're getting, as and when the market keeps going up. So it's wrong to say that with every 100 points movement, this 52 will not get into consideration, because this 52, after 52 we have a 50 strike difference. Right, that's the reason I'm telling calculating the delta right, the calculating the premium based on the delta is absolutely wrong. That only works good in the textbook, because there are like so many factors. When I say, I mean it, right? Other factors are, right, we have discussed about what we have discussed about, let me zoom this out. Right, we have discussed about momentum, we have discussed about time, we have discussed about strike, and now we will discuss about the expiry. And even this is one of the major parameter, how close you are to expiry. So based on that, your delta will also change, right? And see, these 2 points I'll combine. I'm not sure whether you'll be able to understand. These 2 points I'll combine. So let's say on the expiry day, you are on the expiry day, friends. You are on the expiry day, last 1 hour. See, when I say expiry, I'm just combining this 2 and last 1 hour. Right, on the last 1 hour, we always see that maybe a 10 rupees premium will become 50 rupees in last 1 hour. At times it will become 200 rupees also, the 10 rupees premium. And also a 3 rupees premium can become also what, 200 or 300. Why? Why does this happen? You should know the meaning of gamma, right? There will be a gamma impact, right? Because last hour on the expiry, try to understand, friend, last hour on the expiry, right? What all Greeks you will have, right? What are the major Greeks which will have impact on the premiums? Right, one is your theta, one is your delta, right, and the other thing is VIX. Right, forget about VIX now. Forget about VIX, because we are talking about last 1 hour. So do you think in the last 1 hour do you have the support of theta? Obviously, right. As and when, so you how is the time? How is the graph of theta? Something like this. I've discussed many things like Thursday, Friday, Monday, Tuesday, Wednesday and Thursday. So we are talking about this particular time, this last 1 hour. By this time your entire theta decay has been, the theta decay has gone actually. So you're just left with like very minimal last hour, maybe like 2%, 3%. So at that time when the theta is less, right, don't you think the gamma will take the support of delta? The gamma, this one, the gamma and the delta, right, will overtake the theta because we do not have any theta decay at all. So that's the reason this 10 rupees of the premium at times will become 50 rupees on the last 1 hour or on the last 30 minutes, because that will take the support of this gamma, right, and the delta will overshadow, will kill this theta, because we do not have any support from theta, right? If we have some support from theta, though this 10 rupees is bound to increase to 15 rupees, right, this theta will decrease this 15 rupees back to 10 rupees. So this will balance this from Thursday till from Wednesday, or Thursday half day. But last hour, as we do not have the theta, we do not have the time benefit, we do not have the theta benefit, this delta will be high, obviously, right, at the ATM, or right, the delta will be high at the ATM. And if the gamma comes into picture, if it takes the support of delta, this 3 rupees premium can shoot up to 200. That's the reason there is a saying that all the option seller should not stay close to the expiry, because gamma will kill you. Just because you are waiting for this 3 rupees premium, because as an option seller, if you are waiting for this 3 rupees premium to become zero, yes, majority of the time this will become zero by the expiry. But at times what happens, if gamma comes into picture, you do not have the support of theta, and if it takes the help of the delta, so then this 3 rupees premium can become 100 rupees within no time. It can be within 10 minutes, within 15 minutes, within 30 minutes. That's the reason, as an option seller, exit this 3 rupees, ignore this 3 rupees, and you book your profit, because at times this will become a very costly adjustment, because if you're waiting till the end of the market. That's what I've discussed about momentum will come into picture, time into come into picture. Time is theta. Your strike, we have seen every 50 rupees strike, your delta will keep changing, right? As and when you go in the money, your delta will increase. At the money will be like 0.5%. As and when you come down, right, as and when you go OTM, right, this will decrease. That's it. Okay, I'll see. One second, give me a second. Okay, so I think this we have discussed. Right now let's discuss about the delta graph. Let's discuss about the delta graph. This is very simple, already we have discussed. Let's discuss about the delta graph, and let me take you to this one. This is your delta graph, right? I'll just take 1 or 2 minutes. Okay, you have two things here. You have two. One is your call. Okay, let me take the light. One is your call delta and one is your put delta. Try to understand, right? There is a straight formula, right? Your call delta is always positive. It starts from 0 and it ends at positive 1. Okay, so this is your at the money, right? Let's say your at the money is like 0.5% delta. Your OTM starts with 0, so it will be like 0, then 0.2, 0.3, 0.4, 0.5. From this is your at the money, right? 0.5, right? And from as and when you go to the in the money, your delta will increase, like 0.5 to 0.55, 0.6, 0.7, 0.8. It will go till 1, right? It's very straightforward. Your call delta will start from 0 to 1 positive number. This is your at the money 0.5. This is your OTM, right? As and when you go OTM, your delta will decrease. As and when you go to in the money, your delta will increase. That's what we have seen here, right? Let me again show you, right? Let me again show you. That's what, right? So this is your in the money 0.58 as and sorry at the money. As and when you are going OTM, the delta is decreasing. As and when you are going what is this in the money, your delta is increasing. Same with put, right? Where is your put delta? Put delta here, right? This is your at the money 0.48, right? As and when you go OTM, your delta will decrease. As and when you come in the money, your delta will increase. Okay, hence proven, right? We have seen. And let me show you, put delta is opposite of call delta. That's it, opposite. It starts with 0 and it goes with -1. That's it. This is your at the money 0.5. Okay, you know, right? what is it? So this is opposite, right? This is opposite of your call delta. This is self-explanatory, friend. This is self-explanatory. You take your time, right? I have many things to be discussed. Now let me show you, right? Let me take you to the screen of slide and let me see what else I've covered, right? Delta I've covered, and now this is very interesting. Why delta is plus or minus, right? This is interesting, right? What did we discuss? That's what did we discuss? Call is always positive from 0 to 1. Put is always negative from 0 to -1. But let me show you in what do we say, sensible. Okay, so let me take you to sensible. I'll just randomly pick some triangle. Okay, I'll randomly pick some triangle. Now if you go to, this is just typical triangle. If you go to the Greeks, right, your delta is showing minus here and positive. This is contra, right? What did I say? Your delta always is positive for the call side, right? But again in the obstra it is showing us minus. Why? Because your delta is positive 0 plus 1, but here it is showing what? Minus. Because try to understand, you are shorting the call here. You are shorting the call here. See, you are shorting the call here. So when you are shorting plus, right, when you are shorting plus, so that will become minus, right? That's the reason it is showing minus here. You are shorting put. Put is already negative. Put is already negative. So negative into negative, that is positive. So to make it more easy, the moment I make it by, right, this is your what? Long triangle, right? Now see, this is plus, your call is plus and your put is minus. This is the original thing, because this is what I said, right? Every time your call delta will be plus and your put delta will be minus. But the reason why it was showing minus is we are shorting the minus here. The moment we short it, this will become minus. Where is that? Right, this will become plus, right? Minus into minus plus. The moment we are shorting positive, this will become minus. Got it? Ends proven. Right, these are all small things, but you need to know, friends. But you need to know why minus, why plus, right? That's, and then let's move on to, right, how to balance delta via premiums or delta. This is very interesting. This is very interesting, right? Delta can be balanced. See, delta can be balanced by premiums or else by delta itself. Let me show you by premium. Okay, so this is 35. Let me get it to 35. Sorry, right, let me, where is that? Okay, so let's say 45. Do we have anything for, yeah, see, now if you look at this two premiums, right, 45 and 45, the moment I'm balancing it with 45, your delta is almost neutral. All right, see, I'm not sure why this is showing 0.2. So maybe this is showing like 0.21 and this is like 0.20, I believe, right? But still the delta is neutral. Though this is showing minus, the delta is neutral. So now what I'll try to do, right, I've just matched with the premium. So now what I'll try to do, I'll clear this. I'll go to option chain. I'll try to go for delta management. Let's say I'll go for 16 delta. Okay, this is not delta, right? Let me go to Greeks. Okay, let me go to Greeks, and this is your put delta, right? This is your put delta. Let me go to the current market. Okay, which is put delta, right? Okay, so let me go for selling 0.17 delta, right? On the call side also I'll try to sell 0.17 delta. Okay, now the moment I click on this thing, see, now we were able to make the delta balance here also. See, delta is almost balanced because this time we did not go based on the premium, but rather we went based on the what? The delta 0.17 and 0.17. This is the put delta, this is the call delta, but still end of the day we were able to make the delta balance. But I'm not sure why this is showing 0.9383. Ideally, because if you look at here, the delta it is showing as, okay, my bad, okay, 0.83 and what is this? 0.83. This is call delta, right? Yeah, this is call delta and this is call delta, and surprisingly this is showing as 0.83. Okay, so there is some issue, friend, but you try to understand, right? Initially we have mapped with the premium, we were able to do the delta management. Now we are mapping with the delta itself, 17 call delta and 17 put delta, but still the delta is balanced. So the conclusion what I'm trying to say is like the delta management, the delta balancing part can be done by your premium and also by the delta itself. See, at times what happens is like at point see, I'll tell you, at 0.17 your premium, see, your premium is 26. At times this will be like 30 rupees and this will be like 21, because it all depends on the VIX. You know, right? The VIX will be high, the premium, the put side premium will be always high. See, what happened, what I meant to say is like, let me show you, right? At times you will find similar kind of situation, right? Your premium on the put side will be high and the premium on the call side will be high. So in that case, we cannot match with the premium, so we have to go with the delta. So the moment you go with the delta, so you might have this 35 rupees premium and maybe you will have like 30 rupees of premium. So what I want to prove in this thing, right, how to balance the delta, either it can be balanced by premiums or else it can balance by delta itself. Got it? This is as simple. So I can talk for 2 hours also, friend, but this much of information is not required, but it's always good to know, right, how to balance the delta. What is this one? Percentage of success of AITM. This is very important, right? I'll take you to the option chain. See, let's say you are a buyer. Let's say you are a buyer. So when the market is standing at 17,650, if you are a buyer, right, so what strike you will prefer? Obviously you'll go for OTM strike because you wanted to give less premium, right? You wanted to, you treat it as a lottery. Majority of the option buyers, what they'll do, when the market stands at 17,650, they'll go for 300 points OTM or 400, because check the premiums, right? The premiums are less because this is your at the money 109. As and when you keep going OTM, your premiums will be less. So what will you think? You will treat this as a 45 as a lottery. At times few people will go for this thing also. They do not know the logic of the option buying, because end of the day you have a theta, something called theta, which will eat up your profit. They'll go for this 5 rupees, right? 5 into 25. At max they will lose 5 rupees. But if market comes to this level, they think that they will win like huge. No, right? That is not, because there is something called theta which will eat up your capital. Yes, within a day from 17,650 it comes to 18,000 or 90,000, then you will get into huge profit. But if it takes 3 to 4 days, then you will end up losing your premium. We are not discussing about the option buy, we are discussing about the success, right? So this is simple, right? If you are going for ATM, your success is 50%. If you are going for OTM, like 500 points OTM, your success is only 12%. If you are going in the money, your success, this strike, your success rate is as an option buyer 78%. If you are going in the money at this one, your success rate is almost 100, but you have to end up paying huge premium, 659 versus 109 versus 31. It's up to you, right? Though your probability success rate will increase, but you have to pay huge premium. But the disadvantage with the in the money is, by the time the market comes up, this will have liquidity issues. But we are not talking about all those liquidity issues option buying. I'm just telling you the success rate. This clearly says if you go at the money, your success rate is 50%. This is 44%, 37%, 29%. Based on this, you select whether you are very good at momentum or you believe on the percent. If you go for this one, 78%, 92%, this is almost like 100%. Got it? We have discussed about this thing. Future delta is always 1. Right? If you look at the delta of the future, can I show it somewhere here? Can I show that? Let me go to add. Do we have a future? Okay, future, and let me go for 28th October. Let me buy this and see whether it will show. See, the future delta is always 1, right? There is no concept of 0.5%, 0.6. Future delta is always 1. Make it a note, right? But at least if someone wants to go for 50% worth of future, you can go for the ATM. That's what, right? We have discussed here. If someone want to go for like, if they don't want to play with future is very risky, right? The risk to reward would be like 1:1. But if someone wants to play as, I mean, the way they wanted to play it in the future, but with 50% low risk, they can go for 0.52. This, they can go for this strike. If someone wants to play like 1/3, they can go for this strike. If someone wants to go for 3/4, they can go for this strike. right? Rather than going for futures, they can just play around with the options also. So this is like half future, right? This is will be like quarter future. This will be like 3/4 of the future. You're getting my point, right? Pause the video and just try to understand. So I'm just comparing this future delta is always 1, but option delta stands at 0 to 1, plus or minus. Put side is minus, plus side is what? Plus side is your this thing. So let me again show you, right, friend? I'm not sure whether you were able to understand. So let's say this is your call side. Let me again show you one more time. This is your call delta. What did I say? 0 to 1 positive, and there is something called minus. So this is your put side delta, right? This is your put side delta. 0 to minus 1 is your put, right? From 0 to plus 1, this is plus 1 is your call. So when you are shorting this CE, so this CE will become from plus, this will become minus. When you are shorting the PE, the plus, this minus will become plus. That's the reason in the obstra or sensible, right? Whenever you sell, whenever you are going shorting, the symbol will show in the reverse direction. Okay, so we have discussed about this one, we have discussed about this thing, this one, and delta relation with gamma. This is needless to say, we have discussed, right? Delta and gamma are very close friends. That's it. Just you think they are very close friends. If these two are close friends, so then they will dominate this theta. Delta can dominate the theta at the last hour of the expiry day. If gamma takes the support of delta, so then the 2 rupees, 4 rupees premium will go 200, 20, 30, 40 based on the gamma effect, right? Already we have discussed even this thing also. This is very interesting, right? This 3 points is very interesting, and then we will conclude the session. What is the delta of in the money, at the money, OTM we have discussed, right? This is 0.5, right? This will be like 0.5 to, right? 0.5 to like 4, 3, 2, 1, 0, and this will be like, as and when you go inside, this will be like 6, 7, 8, 9. Sorry, not sorry, my bad. 0.5, and this will be like, sorry, not, this is like 0.5, right? From here it will go to 0, from here it will come to 1. That's it, right? So 0.5 to 0.6, 0.7, right? 0.4, 0.3, 0.2, 0.1, 0, and 0.6, 0.7, and this thing also, this will come to plus 1. Okay, and delta of in the money, at the money, OTM we have discussed, and now we'll just discuss about current week delta, next week delta, and far week delta. Let's quickly wind it off, friends. Let's quickly wind it off. Okay, I'll just take you to the option, this thing, right? I'll take you to this thing. So what I'll do, I'll just delete, clear. I'll take the Nifty only. Let me clear this thing. Okay, let me come to, what is this? Your OI LTP, right? Okay, options. Okay, what I'll do, I'll come to LTP. What I'll do, I'll select in the money, right? 17,500 in the money. I'll go for at the money, and I'll go for how many strikes, right? Let's say I'll go for this thing, friend. Let's do, right? 1, 2, 3. So I'll go for 1, 2, 3, 4. I'll go for OTM. That's it, right? So this is your in the money, this is at the money, and this is OTM. Okay, this is OTM, right? Now check the delta here, right? Your in the money is straightforward 0.52. What did I say? 50%. Your at the money, sorry, in the money is almost close to 0.86, and your out of the money is like 0.14, right? Now this is for the current week expiry. Now what I'll do, I'll go for next week expiry. See, now I'm just changing for the in the money to 15 September. So let's focus on this 8/6. The moment I go this, so now this has decreased, meaning the next week in the money delta will reduced when compared to, so again I'll taking you to the 8 September. This was 0.86. The moment you make it to 15 September, this is reduced. Now let's see of the at the money, right? I'm just taking it to 15 September. So there is no change. There is no change, right? At the money remains 0.52. Let me show you for the out of the money. Okay, I'll take you to 15 September. So from 0.4%, this has increased to 35. So what is the conclusion? The next week expiry in the money is reducing. At the money there is no change. The OTM is also increasing. Now let me take you to 22nd September. Let's check, right? 6-7 has reduced or increased. Yes, this has reduced. At the money 26 September, this stands where it is, right? 22nd September from 3.2 to 0.4, this is increasing. Final, I'll take it to the month end. 29 September, this has reduced. Okay, 29 September, this is stays intact. So this 0.4, let's see for the far week expiry, this has increased. Got it? So now let's see for the month. Let's see for the month. 29th, right? I'll take you for 27th October. Let's see this 0.62, this will increase or decrease. 27th October, this has decreased. Okay, 27th October, this has increased. Okay, now 27th October 0.42, this has increased. So this is decreasing, this is increasing, this is decreasing. So let me again take you one last final. 24th November 0.612, it almost came to -1. I'm not sure whether that is right or wrong, right? 24th, this thing, even this is came to -1. So maybe some issue with the tool, I believe, friend. Everything is showing us minus. I'm not sure whether this is right or wrong, but at least we have concluded saying that what will happen. This is straightforward. 0.501. This is the current week, right? If you go to next week, this is decreasing, this remains intact, this is increasing, OTM is increasing. Same with the monthly. Okay, now let me show you one more thing, right? Finally, right, we have covered everything, friends. I'm not sure whether I was able to deliver the content or not. I think we have just covered it everything, friend. Honestly, I thought of showing you with an example of the chart, but I don't think this is required because we have seen all the examples live with the what do we say, with the option chain, rather than me showing it to you on the chart. Okay, let me again get you back to this presentation. Okay, where is my presentation? Let me delete this. Let me take you. So now we have seen the ABCD, or you can say XYZ of delta, because I'm not sure whether you might have seen this type of video wherein we have discussed about this many parameters, right? At least for the effort, friends, just give it a thumbs up, like my video, share my video, right? I mean, you can just share my videos with your friends also. So before I giving the recap, right, so I would like you to just join my Telegram channel, right? So you have 320 members in my Telegram channel. Search for Hybrid Trader, so wherein we will be discussing all the quiz. See, are the gamma traders the option traders, right? We will discuss, like 41 people have participated. Let's say this, what's the best time for the option buy? We take the quiz, like, so 67 people participated, 84 people participated. These are all the real-time quiz, and also I'll be sharing you the answers. So by this time, I think we made some 500 to 600 quiz, real-time quiz, and I always give all those answers also in the form of audio clip. And also we will discuss, we will discuss about the strategies. I'll discuss, I'll share you the payoff graphs, my payoff graph, my risk to reward, right, my price action. I mean, everything we'll be discussing the Telegram. So I would recommend you to join my Telegram channel. And also you can always go back to my YouTube channel, right? Go to this playlist. I mean, the best way for you guys to check out is go to this playlist, so you can just start with all the playlists. I have like 30 to 40 playlists. I've organized all the videos in the playlist, right? You can just go for price action series, psychology, you have 32 videos, swing trading, you have 10 videos, in debit split you have 19 videos, VIX base, this is 2 videos you have, right? You can always go back to my YouTube channel, you can search. Okay, so let's recap what we have learned in this session. Okay, 2 minutes, right? We will be done, right? There are like too many parameters for the premium calculation. It is not always only the delta, right? Many of the textbook definitions says that if the underlying asset Nifty or your bank Nifty goes by 200 points, or whatever the strike the delta stands, so that will get added to your premium, which is absolutely wrong. So starting from today, you have to say that is wrong. You have to defend saying that the price, the premium calculation is dependent on momentum of the market, whether it was a gap up, gap down, slow momentum, it took 5 days, it took 6 days, it took 1 day, it it took 1 minute, it took 1 hours. All these things are you need to consider. Like it always depends on the time. That's what, right? Theta, DK, how much time it is. Like it depends on the strike. It depends on the strike. Each strike has its own delta, so that particular strike gets into calculation. So let's say again, I'll tell you one more thing. So let's say 50 points it has moved, right? So for 50 points, 0.52 delta might be taken into consideration. The moment it moved to 52, so this will become 0.62, and the next one will be like point, let's say 58, right? So this will get into consideration. So there is no straight formula for the premium calculation. Expiry matters, how close, and especially on the end of the day, end of the expiry day, last hour, see this last 1 hour, right? The gamma will play with you, because we have discussed about the delta range. The delta range is like 0 to 1 for the call and 0 to -1 for the put. Why delta is plus or minus, we have discussed. How to balance the delta, we can just balance it by premiums or by the delta itself. Percentage of success is, right, ATM will have 50%, that is 0.5%. Your OTM will have like 10%, 20%, 30%. In the money will have 60, 70, 80, 100 based on the premium or strike selection. Future delta is always 1, but options delta plays from 0 to 1. It could be +1 or -1. Delta relationship with gamma and delta are close friends. If this two gets combined, or if it takes the help, this can destroy the theta, especially on the last hour when you do not have the theta time left. Both your delta and gamma will take the 2 rupees or 3 rupees premium to, right, 10x, 20x, 30x, 40x times. Delta of in the money ATM we have discussed 0.5. That we have discussed about the current week. Okay, so friends, I'll just give it a pause, right? At least for the effort, give it a like. I mean, if you do not like the content, right, you're not motivating me, right? So I might not come up with more unique content. At least for the effort, give it a thumbs up, and also please share my video with your friends. All right, thank you, friends.